Oh, okay. Good morning, everybody. This is 8:02 a.m. And today what we're going to do is we're going to do a simulation on pound yen. And it's going to be a back test of this year. And I guess a few very simple concepts that we're going to focus on are going to be identifying the most recent zones and then identifying where price is going to go once we break those recent zones. I think that's the basic foundations of price action, and I think it's really important that we. All right, welcome everybody. This is a simulation that we're going to go over on pound yen. And I guess what we're going to focus on is we're going to focus on really simple concept, right? And that concept is going to be identifying the most recent zones and then figuring out where prices are going to go after we break those recent zones. We've done this multiple times before, and I think repetition just makes us do things better, right? So what we're going to do is we're going to try to see if we can get some random dates over here. Just got to make sure it's recording on Zoom, recording on another platform running. Beautiful. So, all right, let's check these dates out over here. So we got February, May, we got July, August. Let's go with May. May was my birthday, so we're gonna go with my birthday month here. We're gonna go with 10th of May. So this software is called Soft4FX. I'm gonna write down the website over here if someone wants to go grab a copy of this. So we're gonna write down the name here. So this is soft4fx.com. This is the name of the software. Should I put it? Should I put it down here? All right, let's put it down over here. Okay. Now we're going to go to new simulation, and we're going to start with 2020. It's going to be May 10th, May 2020. The currency pair is going to be pound yen. Going to change the date here again. Currency is going to be pound. Let's start with 5,000. Yeah, I think that's a good start. Let's start with 5,000. Time and charts is going to be just checking. Is there any sound? Because I can't hear anything. Oh, okay. Yeah, there is. So we're going to start with 5,000. It's going to be New York close. Leverage. Let's go with like I know a lot of places are lowering down the leverage. So I guess what we're going to go here with is going to be 1 to 200. Yeah, let's go with that leverage. History on the charts is going to be 150 days. And all right, let's start the session over here today. So we're going to load up the charts here first. Let's go with the weekly. We'll load up the daily and all the way to 4 hour and 1 hour and 30 minute, 15 minute. There we go. All right. One by one, we're going to bring them on. So the way to get this template, right? This naked template, like a lot of people ask me, hey man, like how'd you get this naked template? Would you download it? It's pretty simple. So let's say your charts have these lines on, EMAs and stuff. So you're gonna go to properties. No, actually, you're gonna remove these indicators over here, right? So we're gonna remove these indicators, and then we're gonna go to properties, and then we're going to colors, right? So you can change whatever you want here. So let's say that bar up you want to be this aqua, bar down you want to be purple, and from the inside you want to be, let's say, green, right? So if you want this color scheme, what you can do is you're going to click OK. Once you got the scheme over here, then you're going to right click, go to properties. No, actually right click, go to template, and then you're going to save the template. And then you're going to name it, let's say, you're going to name it Green Army, right? So you can name it Green Army. Let's do this right now. Green Army. And then you can toggle between these templates, right? So go to naked charts. And if someone doesn't like naked charts and they want Green Army charts, you go to template and then you go to Green Army. So that's how I saved it. Pretty awesome name, by the way, Green Army. What's your candle patterns? Green Army. Perfect. All right. We got 15 minutes. Okay, so we got all the charts here now. So let's go to the 1 hour chart. Gonna get the same thing here in the 1 hour time frame. Gonna go to 30-minute time frame. Gonna do the same thing here, 30-minute. I'm gonna go to the 15-minute time frame, and we're gonna do the same thing on 15-minute time frame. So first of all, what we see is a gap, right? We see a gap over here. So this is when the market opens on Sunday morning, Sunday afternoon, morning for some people there. I mean, whenever gaps happen, you have to understand that the main reason why gaps are happening is because price is still moving over the weekend, right? And the only way we see price move during the daytime is when the brokers they get the price movement from the market, right? So on the weekends when the brokers are closed, obviously we don't see price moving, but in actuality, price is still moving in the background. So whenever the market opens, we see the next best price. So price closed around, what was this, 132,289, let's say, and it opened at 132,080. So during the weekend, price moved, and when price opened, this is why we see a gap over here. All right, so let's go towards the weekly. What we're going to do is, so we're going to only be focusing on a specific time, right? And for this simulation, the time is going to be 6 a.m. Eastern because normally, I'm awake at 6:30 a.m. Eastern, so it makes sense for me to backtest the times when I'm actually going to be awake. So we're going to move forward over here. And it's also really important to look at this time here now, right? So this says 00:00. This means 5 p.m. Eastern time. So obviously if this is 5 p.m. Eastern time, Asian Open is going to be 300 hours here on the simulation, right? And if we want to go towards London Open is going to be 1000 hours right over here. This is 3 a.m. Eastern. So 3 a.m. Eastern here is basically London Open. So 3 a.m. Eastern, 4, 5, 6. So this is 6 a.m. Eastern, right? So if you go towards the daily chart, this is where we can see some sort of daily time frame here and what day time frame is trying to do. So now on first looks, what we can see is, let me just bring up line studies over here. All right, perfect. So first, what we can see is that the daily is creating a support over here. It seems like it was consolidating here before, and it seems like maybe this daily candle is coming up to do a retest to maybe continue down, right? So we gotta look at that information in a small time frame now. Let's go towards the 4-hour time frame. Looking on the 4-hour, it's very apparent that we kind of made a high at around 132,940. At the same time, it seems like we're tapping into this support area right over here. And the reason why I say this is a support area, because look, this 4-hour candle wicked down in 132,400 and then retraced all the way up. So on the small time frames, it maybe created some sort of a support. So we're going to take a look at that right now on the 1-hour time frame. So looking on the 1-hour, we have a rejection over there, even though this rejection, it doesn't line up with an area down over here, an area up over here. It's its own rejection. So whenever 1-hour candles are rejecting a price area, that's a very important area, because then you're looking at yourself and saying that, hey, what, if the 1-hour candle is rejecting it, why? Why is it rejecting it? Is there something important there? Like, is that some sort of an important price? So when we look at the price here, this is 132,370. So first of all, what we've identified is a support area. And I think the second thing what we need to identify is going to be some sort of a resistance area, right? So the way to do that is you look at these candles, right? These candles are coming bearish. So whenever candles are coming bearish, you have to ask yourself that what's the area in the chart from where the candles go bearish? And the answer is going to be resistance. So you got resistance right over here, right? So now what we're going to do is we're going to clone these two zones over to the smaller time frames. So if we go towards the 30-minute time frame, what we see here is that price is actually ranging at this point, right? Because look, on the 30-minute, now we can kind of approximate these zones further, that we can say that, okay, 30-minute candle created support over here. And if we break the support, there's a very high probability we can continue down towards, 132,070 to maybe fill this whole gap, which was made in the Asian session. So we're going to do this right over here, right? And if we're looking at for some sort of buying perspective makes sense from the fact that, okay, if we break above, what's this price? Oh, where'd it go? Did you guys see that? The zone disappeared. All right. So if we break above 132, let's say 700, then there's a very high probability we're going to continue up towards, 133, 100, which is like 350 pips away. So we got a 350 pip range here, and we have another 300 to 400 pip range down at the bottom, right? Now it's going to be pretty easy. Either wait for a break up here or wait for a break down below for price to either move up or down. So I guess we're going to start the simulation at this point, and we're going to wish ourselves luck so we can get some positive trades here in this simulation session. Normally, I'm trying to see if we can get some risk management ideas in, or even some impulse entry ideas in. I think that's going to be very beneficial here. Maybe speed it up here a little bit. Let's take a look at, let's copy these zones here, and also let's take a look at on the 15-minute time frame. Okay, so 15-minute time frame is also making that low. So now sometimes what what guys are going to do is like they might take these cells coming down over here to the support, but the most important thing you have to understand is that this is not enough range, right? Sometimes we can just really go into the small time frames and start to look at this and say that, oh, like, you know what, if we break this low, previous low impulse entries, right, then there's a high probability for price to continue down, but it's not enough range. You always have to keep in mind how big is the range. I think to get around 10 pips, 15 pips, you need at least, I would say, maybe like 20 pip range, 25 pip range. That's going to be much better, right? So at this stage, we're just going to wait, because now in the 30-minute, if we break this low, then there's a pretty nice range for price to continue down to. So we're going to keep on waiting over here, right? We're just waiting for the next candle to break the low, because one important thing to really understand is that, all right, let's break this down here. Where's my arrow? It's right here. Okay. So you see this candle here? This candle. So now what we're going to do is we're going to try to read the candles here, right? If price starts breaking down, we have, I would say, at least 5 seconds to read candles, right? You have to get really good at reading candles. So if price is coming down, we have to now see what was happening at the support, right? You had one candle came down, it broke below this area and closed above, right? So at this stage, we didn't know if the support was formed. We had the next bearish candle coming down that closed with a tiny wick at the bottom. So this meant, okay, the next candle should continue down. But since this candle closed with a tiny wick at the bottom, we're not sure if it's going to go up or down, because whenever we have a candle that closes with no wick, that means there's no range for the next candle to continue. So we had to wait for the next candle to either break the low or do what it wants to do. So the next candle closed bullish, right? When that candle closed bullish, boom, we got a support formed. And this candle has no wick at the bottom, which means that this candle had zero bearish pressure to continue down. So if this candle breaks the low of the previous candle, there's a very high probability we can continue down towards, 132.020. That's our analysis so far, right? Currently, price is ranging, and now we have outlined the conditions that we need for price to continue down, right? So now let's take a look at our potential stop loss, right? If price breaks this low and someone takes a sell, stop is going to be around 20 pips, right? Because we want to have a stop loss above the 30-minute candle. Now, that's going to be a very conservative stop loss, having it above the 30-minute candle, like 21 pips, right? But if we drop down to the 15-minute time frame, right? And if we see that, okay, if the 30-minute candle breaks the low, and what if we don't want a big stop loss? Because if you're going to have a big stop loss, that means your lot size are going to be smaller. What if you want a more aggressive stop, but you're also accepting that aggressive risk, right? A more aggressive stop is going to be above the 15-minute high. Because the 15-minute time frames are weak confirmation time frames. So if you're going to take a move on the 30-minute, your aggressive stop is going to be above the 15-minute time frame. So now this depends on what your risk management is. This depends on what your comfort level is with trades and stuff like that. What I like to do is I like to have a stop loss above the 30-minute time frame, right? Even though it's going to be a 20 pip stop loss, but at the same time, if the next 15-minute candle starts breaking the high of the previous 15-minute candle, I can then manage my risk, right? If the candle breaks the high over here, instead of getting stopped out on 15-minute, I can just say, okay, you know what? We broke the highs. Maybe this is the point where I want to maybe close 50% of my position or whatnot. So you can really, really manage your risk like that. So let's take a look over here if we do break this low or not. And then if we do break this low, we're going to try to take an impulse entry here, and hopefully we can take a sell. So let's do this. Bring it over here. And all right, 30-minute time frame. Okay, perfect. So we're breaking the low at this point. So what we're going to go with the 2% risk at this point. Um, so stop loss is going to be around 20 pips, 29, around like 20 pips. That's what we're going to do. 20 pips. Let's do it here. All right, perfect. Right? Awesome. We've broken the low. We've executed an impulse entry. Whenever a candle is breaking the low of a candle which has no wick, that means it's breaking its entire structure, right? So this 15-minute candle, we can take a look here. It's only 17 minutes in. Let's take a look at the trade that we have running here. So we're at 4 pips, 5 pips. Looking at the 15-minute time frame, it's still running nice and steady, going down. So yeah, I think it's pretty good. We're about like 10 pips deep, 11 pips deep. Now, at this point, you have to understand, right? Even though you're running at 12 pips, you have to understand what your plan is with trades. My plan with trades is whenever my price runs into 12 pips, 15 pips, and even though we see clean traffic here to the left, even though we're running at 12, 15 pip, 12 pip profit, I would want to secure partial positions at this point. So I would secure 80% at this point and put stops at break even, right? So one important thing to understand is that even though my stop loss was around 20 pips, I still secured 12 pips and I'm willing to let the rest of the position run further down, right? The reason why I'm not letting this trade run into complete 20 pips like one-to-one risk reward, because what we can see here on the left-hand side is that price kind of like rejected this area right over here, right? So we don't know whether price is going to continue down and reverse before 20 pips, or is it going to continue moving down? So you always have to understand at what point you're always securing profits, right? Because if my risk reward with this taking profit was like a negative risk reward, but now I secured profits, right? I secured profits, my position is open, stops are at break even, so now my risk reward is positive. I cannot go in a loss now. So I think risk reward is subjective to what your positions is and what your situation is on the market there. On impulse, are you using no? I On impulse, are you using buy stops or are you using magic keys to enter? The market executions. Whatever I do over here is what I do on the live stream. So if I don't use a buy stop, I don't use a buy stop. So this is a 100% simulation of how the live streams run. And we can look at this. The candle's now coming down to a close. We got 2 minutes left looking at the 1 hour time frame. It's now coming down to an area where it's sort of like rejected before right over here, right? Because look, this is where the price closed. We had a gap up over here. So we don't know whether this is going to continue down or not. So probably going to close another 50% at this point. And yeah, let the rest run. So if it continues down to our target, awesome. And if it comes up to our break-even point, that's still awesome. Still pretty good. So looking on the 4-hour time frame, notice we didn't even look at the 4-hour at all, right? We didn't look at the 4-hour. All we looked at the daily, and we looked at the daily and we saw that, okay, daily is probably coming up to a zone over here, which it might reject. That was our bias on the high time frame, and then we jumped on to the 1 hour time frame and the 30-minute time frame to see that, okay, what levels price would have to break to justify the daily candle to kind of like reject this area. And that level we found on the 1 hour support hit there. The 30-minute support there, and yeah, that was it. So I think this 30-minute candle should continue down. Now, if we look on the 15-minute time frame, 15 minutes kind of like coming up over here, kind of like retracing. So now, if this next 15-minute candle, if this breaks the low over here, then there's a high probability it's going to continue moving further down, right? Are you using magic keys? No, we can't. We can't use the magic keys on software FX. So this was pretty simple idea. We identified the most recent support, identified the most recent resistance, and then we identified where will price go if we break support and where will price go if we break resistance, right? Price was breaking down. Obviously, there was no confirmations. Here's the thing, right? If someone who has never used impulse entries, taking impulse entries is going to be a test of your nerves, because now you're going against the grain. Okay, so let's take a look at this, right? Candle closed with no wick over here. Now, there's a probability that this next candle can continue going up or it can continue moving down. But we're approaching this support over here. So I guess this is the point we're gonna secure positions. Actually, you know what? Let's close another 50% and let the rest run. Yeah, so for impulse entries, the thing is, if you haven't done impulse entries before, you're probably going to miss moves because sometimes when you're trading a high volatile pair like pound yen or sometimes euro yen gold, you will notice that these pairs, they don't necessarily do any retests. The candles don't give you strong confirmations, so you're forced to look into impulse entries, and we've discussed this in great detail. Would you consider dojis on 15-minute as important price to watch out for? Sometimes. Sometimes, because usually the 15-minute candle closing is just a retracement on the 30-minute time frame or on the 1 hour time frame. That's all what it is. So, I mean, when the 15-minute candle closed like this, I understood, like if you look at the time over here, right? This 15-minute candle moving bullish was the 30-minute candle here creating a top wick, right? So if the first 15-minute candle closed bullish on the 30-minute, and you expected the full 30-minute candle to continue bearish, then in essence, you expected this 15-minute candle to break the low to continue bearish to complete the 30-minute candle bearish. So you need to understand how candles form based on time frames. So awesome. Took one trade over here. Lasted about 30 minutes at this point. So yeah, let's take a look at this. Impulse entries are better when session opens, exactly, or no? No, impulse entries are okay when you see it. So you have to practice it. If you haven't done impulse entries, you'll be spending a lot of time watching how impulse entries play out before you execute on them. Right? So we look over here, prices really came down to the zone, which was, I think it was a pretty good price position over here. So that was our first trade over here. Let's go on towards the next day and then see what we got here on the next day. On these impulse entries, do you find a stop loss above 15-minute candle works because of momentum? You know what? We discussed that earlier in the stream. So if you missed it, you can just watch the recap after we're done, and then you're going to get your answer there. All right, let's go towards the next session here. Oh, wow, look at that. We rejected that entire area on the 4 hour. On the 4 hour, yeah, it's time to go up now. So it doesn't matter. Whenever price moves after you're done from the trade, it does not matter at that point because we're obviously going to be not trading. What mostly happens is that what people are going to do is that they'll take winning trades and then they'll keep on looking at the charts for another 4 hours, 5 hours in the afternoon and whatnot. So those things don't matter. Even though we see price move up over here and now we're seeing price correct this whole move down, it doesn't really affect us at all because our time to trade is at New York Open, well, pre-New York. So that's what we're going to do at right now. So this is London Open right now, 1000 hours, 3 a.m., 4, 5, 6 a.m. So we're moving into 6 a.m. Eastern at this point now. So remove this. We're gonna go over to the daily time frame, and we're gonna keep daily as it is right now because what we can see on the daily time frame is that the previous daily candle actually did close bullish, and the next one is closing. It's kind of like still open at this point. Let me try to see if I can zoom in over here. Okay, perfect. Right. So we're not sure if this candle is going to go bearish because we're approaching like a break and retest area, or this candle is going to continue moving up into this previous zone and then maybe continue on towards 134, 400 and whatnot. So we have to take a look at the 4 hour now. So looking at the 4 hour time frame, what we see is that there was a all right, so let's just remove all these zones and let's do some fresh analysis over here on the 4 hour. So we're going to try to see if we can zoom in over here. Do this. Perfect. Let's draw a zone at this point. So we got a support down over here. This 4 hour candle moved up. It kind of like tapped into our resistance at 132,880. And now we're not sure whether this wick means a possible wick fill or this wick means like a rejection. We're not sure about that, right? So we have to take a look at the 1 hour time frame at this point. So looking at the 1 hour time frame, what we see is that there's a support forming over here, and we also have a resistance forming up over here, right? So now this seems like a very simple setup. And the reason why I say it looks like a simple setup is because price moved up, created a high at 132,780 or 770, came down, this candle closed bullish. So if we want this candle to continue up, it needs to respect the low around, 12 pips away, 13 pips away, and then continue on to fill this wick and continue on to, to this high over here at 132,780. Seems like a pretty simple trade, but the thing is, we cannot be consumed with just one bias. We always have to keep in mind two biases, right? So what would happen for sells? I think if this new candle breaks the low over here, then there's a very high probability price are going to continue down to fill this wick around, 132, 300, which is like 16 pips away. So let's take this idea and let's take a look on the 30-minute time frame and let's see if this buying idea actually makes sense or not. So looking at the 30-minute time frame, it looks like, previous 30-minute candle left a wick. This candle also left a wick. But at the same time, I mean, we're also creating a support. So now we have to see if we have some sort of a resistance that's forming on the 15-minute time frame or not. So let's take a look at that over here. So looking at the 15-minute time frame, 15-minute time frame is also bullish at this point. So I mean, at this stage, I think it's going to be a pretty good idea to kind of wait for price to break above this area right over here, right? Because even though we think that price is going to continue moving up, you have to understand that this is a minor resistance right here in the 15-minute time frame. It looks very clean, very solid on a 1-hour candle over here, but we have to wait on the 15-minute, so let's see what happens. Actually, you know what? Since this is a simulation over here, we may want to take some sort of since this is a simulation over here, we're going to try to execute based on the 30-minute here, right? So let's take a look here. This is like 7 pips away, 6 pips away. So we're going to do that. We're going to do it 8 pips away. And we're going to target it based on the 30-minute. And what we're going to do is we're going to keep a stop loss below the 1-hour time frame. Yeah, okay. We're going to keep the stop loss below the 1-hour time frame. So this is going to be, even though if price does go down, this is going to be an example of risk management here, because now look, our stop is below the 1-hour time frame. Let me just modify the stop loss here a little bit. So it's below the 1-hour candle. And if we play this, and if now on the 30-minute, if we start breaking the low over here, then we're going to be closing 50% position at that point. Because for price to continue moving up, at least the 30-minute candles have to make higher highs and higher lows. Right? That's about it. Because as long as they keep respecting the lows of the previous candle, I think we can anticipate price to break above this minor 15-minute resistance. Right? If this was a 30-minute resistance, then I would say, okay, you know what? We have to wait a little bit. But now, since I realize if this is a 15-minute minor resistance, we can anticipate price to break this as long as the 30-minute candles are respecting the previous lows. So that's the condition. But if price breaks the low over here, then we're obviously going to try to, okay, perfect, we're moving up over here. That was a pretty good push in the first 5 minutes. We moved up on the 30-minute and the 15-minute. Now, as you can see, I'm not going to secure positions. I'm not going to put stops at break even either. Now, the thing is, what mostly happened this week and the past week is that people are going to go in profits for about 6 pips, 7 pips, and they'll put stops at break even. Right? What you're doing at that point is you're choking your trade, right? You can't put stops at break even when you go in 6, 7 pip profits because you have to let it run, So what I do know is that if it comes down and breaks the low over here, I'm securing maybe 50% stop loss at this point, right? But my plan is to put stops at break even once we get towards, like 10 pips, 12 pips, so 30-minute candle still open at this point. And the previous 15-minute candle closed like a weak bearish candle, but it also created a higher low and a higher high. So in that way, we can still stay in this trade. And now we can say that, okay, since the 15-minute candles are now making higher lows, we can now anticipate this candle to respect the previous low for it to continue moving bullish. And as I think we cross these wicks, we should continue moving up to this point over there. Man, we're pretty lucky we're getting easy trades in the simulation. Last time we tried GU and oh, what a disaster. Ranged the whole week. All right, so 30-minute candle is about to close. We got 10 minutes left over here. And as long as this can, okay, perfect. So we got around 11 pips at this point. Going to close around 80% and going to put stops at break even. And that's it. Right? So if we measure this range on the 1 hour, this was a 30 pip range, so getting around 10 pips, 12 pips, and a 30 pip range. It's really easy to do. Oh, wow, look at that. We're going all the way up over there. Looking on the 4 hour, we're coming up to fill this wick. I think we can continue on to fill that wick on the 4 hour if we're moving up. So this is where you're letting your runner do all the heavy lifting. And what I mean by heavy lifting is like breaking through zones. You know, I never let my full positions go through zones. All right, so we're coming up to this wick over here. We're filling the 4 hour wick. Probably gonna close another partials here. Gonna close another 50% and let the rest run, right? So the runner is doing the heavy lifting. So you're securing majority of your position and the rest of the position is just doing the heavy lifting. So you can see price came up to fill the wick, closed partials, and now, price is retracing here a little bit. Perfect, right? Wick fills. And normally what I've also seen is that sometimes when price is going to fill the wick, there's going to be some sort of a retracement there too. So maybe that was a resistance there. Oh, okay, yeah. See, so candles came up, they look left. They saw price rejected there before. That's why the 4 hour left a wick, and now this candle's coming back down. And as this candle closes below resistance, then the probability of price coming back up becomes lower and lower. So yeah, so we risked around 2% on this trade. We secured positions. Runners still running at this point. Our first trade, we risked around 1%. So probably gonna, yeah, I may want to just leave this open. I mean, if you, oh yeah, we got stopped out. Perfect. Right. So trade is done. First thing in the morning, first trade, just done. So this is like the same thing happened on Thursday or Wednesday. We came on the charts, we took a trade in the first 10 minutes, 15 minutes, and then done for the rest of the day. So this is a $5,000 over here, this account. And let's take a look over here. So balance is at $175. So 2 days we've made $175. That's pretty good. That's pretty good. $175 printing from the market in 2 days, 3.5%. Not bad at all. Way better than what the banks give us, right? But the thing is, we don't want to go overboard. Like a lot of times people want to risk a lot. They want to make 3% a day, 5% a day, 10% a day. That's all well and good, but that's not realistic. It may last for a little while, but for the long term, man, it's not realistic. You talk to your mom and dad, and they'll say, man, listen, quick money doesn't exist. So awesome. So let's see if we, okay, so see, now this is a great example of price action at this point, right? So this is the New York open candle. We forwarded one candle, and we can see how this 1 hour candle closed with a weak bullish, weak bearish body, right? So now what I'm looking at this and saying is that, oh no, this is a 30-minute candle, right? So if this new 30-minute candle is breaking above the high, there's a very high probability it's going to continue moving up. And that's where you can kind of like sit back and say, hey, like, what, if this is going to be a good impulse entry trade, maybe this is going to be the entry right over here, having the stop loss below this current candle as it's breaking up. So we're not going to execute it because we already took our trade. So just going to see if it plays out, right? So we're going to do like this is like a paper trade over here. Pretty antsy moment over here as it's coming up and down and kind of like bouncing around. This is a paper trade moment. So now since this is the volume time, we're anticipating volume to drive price continue bullish. Oh, paper trade got stopped out. See, this is why when you take a win, you don't try to you try to get another win. So paper trades work all the time. If you're looking for those volume pushes, this should now continue working. You won't look left here. Yeah, we looked at look left here. The only problem is there's a lot of wicks over here in this area, right? You have wicks over here, you have wicks over here. So you need a lot of volume in the candles to continue price moving through those zones. I'm not sure if it's just me, but your voice is about 15 seconds ahead of screen time. Oh, really? Is that the same for everybody? Oh, okay. Yeah, maybe want to restart something, or maybe want to restart Zoom or something. All right. So, oh wow, yeah, we didn't go up over there. All right, awesome. So let's go towards the next day over here now. Let's go to just falling over here. Let's take a look at this daily candles coming down as well. Oh wow, look at that. Daily candles dropping further. So see how on the daily candle once it broke the low over here, kind of like the same idea we were discussing on the first trade we took. Daily candle broke the low, so there's a high probability now it should moving down because it broke the low. Second, it tapped into this previous break rejection area, right? So these things work on all time frames. Look at that, broke the low. We're forwarding the candles and it's continue moving bearish. Look at that, right? Wow, 500 pips down. So if you look on the 4 hour, just monstrous push downs. Look at that, monstrous push downs. And now if we want to see, okay, let's kind of like break this down here a little bit, right? Let's go back here a little bit. And this is what I'm going to do for educational purposes only. So if we draw a zone over here, actually screw the zone. Let's draw a line over here, right? So I'm going to draw a line over here, and this line I'm drawing at the bottom of the previous daily candle, because now what we want to see is that if price was falling, how could we catch this on the smaller time frame? So let's look on the 4 hour time frame. So in the 4 hour, okay, so we have to clone this, right? Clone this onto the 4 hour time frame. So this is the low it needs to break right over here, which it has broken. Looking on the 1 hour time frame, this is the low right over here. Looking on the 30-minute time frame, right? On the 30-minute now, price needs to break below this area to continue down, right? So we're going to try to see if there was some way to catch it. So, okay, we broke the low at this point. So now if we broke the low in the daily candle, there's a high probability for it to continue down. I guess once we break the low over here now, so let's see what the next candle prints. Okay, so we're doing some sort of a retest, right? This is perfect, right? We broke the low, price came up to do a retest, and now even though this candle closed with no wick at the bottom, we have a lot of things that are on our side, right? The number one thing is on our side is that the daily candle broke the low after a retest. The number second thing is on our side is that the 30-minute candles broke this super strong support over here. And the third thing is that we did a retest over here, right? So now maybe this candle having almost no wick at the bottom could mean that, okay, we can have a stop above over there and continue moving down, right? Even though if this is a big stop loss for some people, we can maybe go down to the 15-minute time frame and kind of like expect price to maybe respect the previous high to continue down. So let's see what happens here in the 30-minute time frame. Oh, okay. Yeah, we move down further, right? So first attempt got stopped out in a 15-minute, but see, this is why on the 15-minute the stops are aggressive, right? That's why you're having them on a 30-minute time frame. Look at this. This candle closed bullish, and now we know that, okay, if the next candle breaks the low, there's a high probability to go down, and then eventually we started to move down over there. Beautiful. All right, so let's go towards the next session at this point. So we're moving on towards, this is London Open. Right? Let's take a look at London Open here. So London Open seems like we're doing some sort of a retest at this point. So let's go towards London Open, 3 a.m., 4, 5, 6. This is 6 a.m. Eastern, right? So we're coming back to the charts from this point right over here. And what we see is all this big moves coming down. And we're like, oh, wow, man, things really moved when we were away. You know, looking at these big moves coming down in London session. This is when I'm waking up and I'm looking at the London chat and I'm seeing everyone taking, you know, these big sells and GJ. And I'm like, man, wow, I have to do a lot of work now to catch on these moves. So looking at the daily time frame now, right? So the previous daily candle obviously closed with no wick at the bottom. So this new daily candle is coming up. So we're not sure if it's coming up to make a top wick to continue down, or, I mean, we just don't know that. So we're going to take a look at the 4 hour time frame here now. So looking on the 4 hour, the first thing we see is support, right? We see a support over here. And the second thing that we see is a possible rejection at this area right over here, because 4 hour candles rejected over here, we kind of rejected over here, and then we broke below this area. So maybe 4 hour candles are coming up to continue up, or maybe ranging on small time frames. We just don't know. What we do know is that we have a support at the bottom over here. So let's take a look at the 1 hour time frame here now. So looking at the 1 hour, we basically have a support here, obviously, right? And now what we can do is we can maybe remove this blue line, and because now we have a resistance on the 1 hour right over here, right? Because if we look to the left of this candle, we had a resistance here. And if we extend this area, it kind of matches up with this consolidation area here to the left as well, right? So let's clone these onto the 30-minute time frame and see what we can do over here. So looking at the 30-minute time frame, we're approaching resistance here. If we can create a resistance at this point, I think we can get a move coming down. But at the same time, yeah, let's just see here, because this candle is closing below resistance. Doesn't mean a buy because we're at resistance. It doesn't mean a sell because, candle is bullish at this point. So let's take a look on the 15-minute time frame. 15-minute time frame is also kind of like, hovering in that area. So we're not really sure what's going to happen at this point. Let's take a look at news. It's Wednesday. So, some news comes out on Wednesday. We got Power talking later on. Okay, whatever. Awesome. Perfect. So, yeah, I guess we're just going to wait over here. This is my favorite time, when we have to wait at this point. So looking at the 30 minutes also at this resistance over here. So we're kind of like waiting to see if we break this. Okay, so let's do this, right? If we break this resistance, we have to identify where price is going to go. Yeah, I forgot to identify that. If we look to the left-hand side, we have to identify those areas, right? So if we look to the left, where's my... Okay, there we go. All right, so if we look to the left, first of all, we have this rejection right over here, which kind of matches up with this rejection over here. So we need a candle closing bullish above this area, not an impulse break, no impulse breaks, because we have these rejections here for impulse breaks, right? Impulse entries are when candles are just running. But when the candle keeps running, it's going to encounter these rejections. So it's going to look at these rejections and it may kind of come back and close in the range. So you have to wait for price to kind of like close above this area to give you an opportunity to continue up. And then if we do continue up above these wicks, the first area we see is right over here. So we're going to draw a zone at this point, and this zone is going to be 132, around 132.060. And if you measure this range, this is like a nice solid 32 pip range, right? So if we get a candle closing above here, we can continue moving up. Or if we can create some sort of a resistance below 131, 720, 730, then we have a clean range going down towards, in this 29, 30 pip range here. So yeah, it's going to be a pretty good trade if we can come down or continue to go up, right? So we're now looking at both buys and sells. So we have both biases in mind, and we're going to wait for our confirmations. If you get a confirmation, beautiful. So yeah, looking at the 15-minute here. What I'm also thinking is if we break this 15-minute low, can we continue down or not? But I'm not going to execute on it because it's a 15-minute time frame, it's a weak confirmation time frame, and it's just, I don't know, not good. If this was 30-minute, I might do that, but yeah, I have to wait here. This is my favorite sort of setup when we have to wait. So the 15-minute candle has closed, 30-minute candle is open. So notice how Monday and Tuesday we had trades in like the first half hour of the day, and now we have to wait over here. Let's speed it up here a little bit. Let's go towards the 30-minute close. 30-minute candle is about to close at this point in 5 simulation minutes. All right, in 3, 2, 1. 30-minute candle closed bearish. Next 30-minute candle is breaking the low at this point. Let's take a look on the 15-minute. 15-minute candle is also breaking the low at this point. Looking at the 1 hour, 1 hour candle is bearish, right? So the only problem is we don't know whether this 1 hour candle is going to finish bearish or this 1 hour candle is going to come up to make a wick. So remember how I said that if the 30-minute candle closes bearish, can we get a move coming down? I want to take my words back and I want to say that, okay, if we form a support and if we break that support, all right, so let's do this, right? So this candle is coming down. Let's say this candle closes bearish like this. And we have, let's say the next candle, if it closes bullish like this, right? So now we have a support formed. So for instance, if price breaks this support, then we can have a really nice move coming down, Makes sense. So whenever price is approaching a resistance, I want to take my words back about what I said about resistance and stuff. So whenever price is approaching a resistance, I think not only we need to wait for a rejection, we need to wait for a support to be formed on a higher time frame, like a 30-minute time frame, 1 hour, perfect. 30-minute, also very, very perfect, right? If you can get support formed on a 30-minute time frame, and if we break that support, then that means price is breaking a strong confirmation zone for it to continue down. Right, but if we respect the support and we continue up over here, now we're in the range, and we'll need price to break above this range to justify that, okay, the next candles can now continue moving up. So let's just wait over here. Like if we form a support, I think that's going to be a pretty good idea. It really is moving down over here. How far did this thing move down? Oh, 6 pips, 7 pips, not that much. So this 15-minute candle is also about to close. So remember, we're waiting for a support to be formed. If a support forms, and if that support breaks, then we're going to continue down. But if that support is respected, then I guess not. So this 1 hour candle is coming down to a close. And as it's coming to a close, we're going to see how it's going to close. Probably it's going to close bullish or bearish. Okay, that's the 1 hour candle, right? So the 30-minute broke the low, and 30-minute came down what? 11 pips, 12 pips, whatever. So the 1 hour candle has closed bearish over here. 30-minute candle is also closing bearish. 15-minute candle is also closing bearish. So can't take a sell because the support is not breaking, and I mean I don't know. We just don't know how far it's going to go down because we had some sort of consolidation over here as well. Can't take a buy because the candles are bearish. Why are you waiting for a support to be formed when the candles to the left are clean? Because price moved up and created a high. So it could reject. So that's why we need a support forming, because we don't know whether next candles are going to reject this area or continue down. We just don't know that, right? But if a support is formed and if price breaks that support, then the probability of it moving down is way higher than what it is right now, right? That's why we're waiting for support to form. Because when you wait for certain technical aspects to kind of like formulate in the charts, they increase the probability of price to move where you want it to move. Right? So if we break a support, the probability of it moving down becomes higher. If price is already moving down and you take a sell because there's clean candle to the left, the probability of it rejecting becomes higher. So those are really important concepts when you have to be really patient with some things here and there. If support is formed and it breaks it, is the range large enough to catch 10, 15 pips? Great question. So if a support is formed over here and we break support, we calculate the range is about 20 to 24 pips, right? So it's going to be pretty good range. But if a support is formed and we get indications we may continue moving up, and if you measure this range, this is like a 20 pip range here as well. It's still a pretty good range now. So we have to wait. Would you not have taken a buy when we broke resistance? No, because we weren't present at the charts at this time. What are you guys doing? You guys late over here in the session or what? If someone's late here, if someone's joining in right now, you have to watch the recap, right? Because you can't come in the middle of the class and ask things that we've discussed previously. Is it also because the timing of the market? Yeah, that's basically it too. Because right now, we're just kind of like waiting over here. So this 15-minute candle is closing at this point. We look at the 15-minute candle. Look how 15-minute candles are printing side by side. So we don't know whether it's going to continue up or continue down. The 30-minute candle is also about to close at this point. So it's better to wait for the 30-minute candle to close to see if we're going to get some sort of move going back up. So looking back at the 30-minute time frame, we're going to see over here. So see, this 30-minute candle is breaking the high at this point. Now this increases the probability of price to continue up to retest, 131,740. But now there isn't enough range. So we're just sitting waiting. So remember the first two trades we took, those are really, really easy trades. So that's something that we're waiting for over here. So this is where the 30-minute candle is closing. 30-minute candle is closing below resistance. And yeah, man, it's closing below resistance. So there's like nothing we can do at this point, because it's closing below resistance, and the 1 hour candle is also over here. It's still, open at this point. So yeah, we're just waiting. Someone can be really risky and play around in this range, but trading is not about taking risks you shouldn't be taking. You know, trading is about taking minimal risk with a high probability reward. You know, so we're just waiting over here. Okay, so the 1 hour candles are breaking the high over here. We need it to close above this area. So it's coming up. We got about 15, 17 minutes left looking at the 30-minute time frame. 30-minute candle is also coming up, closing above this area. Beautiful. Beautiful. Because if it closes above, it's going to increase our chances to take a buy for price to continue moving bullish. Now, taking a buy at this point is going to be really risky. The reason why it's going to be really risky is because the candle is about to close. So you have to wait for the candle to close. Now, since you're waiting for the candle to close, you may miss the move up, right? And that's totally fine because you're waiting for the candle to close. But also, what can happen is that price can close down over here and give you a really good opportunity to take a buy, and then you can get that move up, right? So we got about 5 simulation minutes left over here for candle to close, and it's going to be closing soon over here. And we're just waiting for this candle to close. Looking at the 1 hour as well, it's coming up, which is beautiful. See this? Goes up, comes down, goes up, comes down. So you're waiting for the candle to close at this point. All right, and perfect. There we go. 1 hour candle closed bullish. Looking at the 30-minute candle, 30-minute candle also closed above here. But the problem is, here's our issue, right? Our issue is these rejections here to the left-hand side, right? We don't know whether price is rejecting here because we rejected here or what's going on. Let's take a look on the 15-minute time frame. See this 15-minute candle? It's closing with a very weak bullish candle, right? Even though the 1 hour looks good to go up, 30-minute looks good to go up, and I think we can have a stop loss down over here around 15, 16 pips. Actually, you know what? Let's take a buy over here and we'll have a 16 pip stop, right? 16 pip stop over here. And what we're going to do is we're going to be cautious about this 15-minute candle for risk management purposes, right? We're going to be cautious about this candle because this candle closed with like a very small bullish body. So if this new candle breaks the low over here, I think that's going to be a good opportunity to close 50% positions and let the rest run to see where we're going to go. So let's play over here, right? If we go up, awesome. If we come down to break that low, then we can manage our risk at that point. Okay, see, we broke the low in the 15-minute time frame. So over here, I'm going to close 50%. I'm going to take off 50% right there, just like that, right? And we're going to let the rest play out and see if the next one goes up or not. So candle's still open, it's running. So see now, even though this can continue going up, we removed some risk, we removed some anxiety from the trade, right? This 15-minute candle is about to close. And I mean, if it starts to go down again, see now, it's starting to break its own low at this point, right? It's starting to break its own low at this point, and this is the second half of this 15-minute candle. So you have to be really anal with risk management, man. I'm telling you this. You can't just let it drag on and play around because if we, all right, let's just play it a little bit more. All right, see now it's breaking even lower. So this is where I'm going to close another 50%. Right? Because I'm getting really impatient with this loss. I don't want to take the full loss, so I'm getting really, really impatient with it. You know, so it's came down, not closing. We got about 4 minutes left. Will this be in the database? Of course it's going to be in the database, my friend. Imagine we do a webinar and it's not in the database. A lot of people are going to be mad at me, man. And they be like, yo, what the hell, Raja? You know, so look at this. This new 15-minute candle, it's breaking the low of the previous 15-minute candle, right? We look at the 30-minute, 30 minutes coming down in the range. Does it make sense to hold this trade now? Does it make sense? It doesn't make sense to hold this trade. So this is the whole idea about being impatient with the losses. Come on, man. Shit. I mean, we thought it's going to go up. We're going to have a winning streak in this simulation, but I guess not. I mean, this candle's coming down. So yeah, this candle's about to close. So let's just speed it up here a little bit and see what's going on over here. So yeah, the 30-minute candle closed like this. I mean, you know, we tried. So now, if we want to give this trade idea a second chance is going to be if this new candle closes bullish. That's going to be the second chance we can give to this trade idea. If this candle doesn't close bullish, then there's no buys, so now you're waiting. Even though someone can think that, oh, no, you know what, I'm going to take a buy when this candle breaks the high on the 15-minute. No, 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 man. You got to protect your money. I mean, you need the 30-minute candle to close bullish over here, right? So, I mean, if it doesn't, see now it's breaking the low over here. Now, awesome. So let's take a look here. Let's take a look at our closed trades. So look at our P&L, right? $50, $10, $76, $21. Look at this loss, 14, 10, 14. Tiny small losses, you know. So you got to keep your losses small. All right, perfect. So let's go on towards the next session over here. So price, oh, we eventually broke down over there. Okay, we broke down later on. Awesome. Let's take a look at the daily candle here. Yeah, daily candle is continuing down over here. Weekly candle is also coming down to fill the wick over here. Oh, okay. So bias was bearish here after all. So anyway, water under the bridge. So let's go towards the next session over here. It's going to be 3, 4. We're going to go towards your London session. This is 9. This is London Open at this point, right? London Open at this point, and London Open is still coming down over here. So now we're going to go towards pre-New York. This is 4 a.m., 5 a.m., 6 a.m. 6 a.m. Eastern. So looking at the daily candle broke below the support. It's coming down. Looking on the 4 hour, basically what it did was it created a support, right? So the first thing we see on the 4 hour is that we created support. The second thing we see is that it created a resistance and then it continued moving down. And after that resistance was formed, it also created some sort of a support over here because you can see these wicks rejecting this area. So it's kind of like an important area now. If we extend to the left-hand side, yeah, it kind of like makes sense there. So we're going to leave it as it is right over here. So let's go down to the 1 hour time frame. It's really easy, right? We're just breaking down time frames at this point. So looking on the 1 hour, we have a support down here, and then we have a resistance, which is right over here on the 1 hour time frame, right? And ironically, this resistance kind of like matches up with this support area here before we had, and then again we have this another resistance area right over here, right? So now we have these two ranges. So if we break above this price level, 136.20, there's a very high probability we're going to continue up towards, this area, which is like, okay, this is like 35 pips away. It's a pretty big range, pretty nice, easy range to play in. And if we kind of like reject this area, then we have this range to play in, which is like 39 to 40 pips away. I'm surprised, man. Like this range is pretty good, pretty awesome range over here. Okay, awesome. So let's see here. Let's clone these ranges over to the smaller time frames, to the 30-minute time frame. Yeah, right over there. So now what we got to see is that if the next 30-minute candle breaks the high over here on the 30-minute candle, I think we can continue moving up towards this area. So now this may not look big, right? But it's pretty big. Take a look at this. It's pretty big, right? If we break above this high, there's a very high probability we're going to continue up towards 138.50, which is like a 16, 17 pip range over there. Looking at the 15-minute time frame, yeah, it could make sense. Do you only look at 30 plus pip ranges or 20? Whatever there's present, Ironically, we have a 40 pip range here, so it is what it is. Normally, I would want to see like a 20 pip range. If I'm feeling very adventurous, I may also go with 15 pip ranges, but normally I'd want like a 20 to 25 pip range. The higher the better, Like if you have a bigger range, that means your runner can move more, and that can mean you can make more money, basically. So looking at the 30-minute time frame, where, oh, okay, this candle is not breaking the high over there. Yeah, so, oh wow. This thing really broke the low and continued moving down. Wow, this could have been a pretty good trade over there from like a rejection perspective. Yeah, so we're just gonna wait here. This 1 hour candle is rejecting that area as well. The thing is, I don't want to take another loss. I already took a loss here the previous day on Wednesday. Wow, great rejection. Let's see if we have any news here. Um, okay, this is probably the speech. Makes sense. Wow, that's some crazy rejection here on GPY. So the new 30-minute candle is about to start. Okay. Looking at the 15 minute is closing bullish over here. Looking at the 30 minutes kind of. So see now, this is why this is not going to be a wick fill, right? Someone may argue, okay, we can do a wick fill over here, but we can't. This is the idea we discussed on Thursday there, that it can't be a wick fill because the 15-minute candles are creating support. You will need price to break below 130, 430 right over here for price to continue down, which is like 6 pips away, right? So that's why it's a rejection and it's not a wick fill, because the small time frames are creating this, like 15-minute is creating the support over there. So it's not a wick fill. What may happen is you may get a buy above this area if we break this high to continue up maybe towards this. So notice how our range now became bigger, right? Because first we were looking at for price to break above this high to continue up 16 pip range. Now we're looking at price to break above this high to continue up. Now it's a 22 pip range. Do you read fundamentals or go overall bear bias on price? No, I don't look at fundamentals. I keep fundamentals in the back of my mind. I will not read fundamentals to know where price is going to go on a 30-minute chart or like a 1 hour chart. That's just not how fundamentals work, I think. They work basically on weekly, daily, high time frames. So even though we're breaking the high over here, the stop loss would be 18, 17 pips. It's going to be pretty big, man. Yeah, it's going to be pretty big stop loss. So probably going to wait to see if the candle closes above or not. Ooh, wow, look at that. Nice solid move over there. Right? So notice how we're in profits. So I'm being extra cautious over at this point. Oh, damn, man. What's GJ doing over here? I don't remember this day at all. Holy, didn't really continue. See now, it gave you opportunity to close 12 pips, 11 pips. This is the start of the new 30-minute candle. So notice how this 30-minute candle closed below this resistance right here. It closed below this area. So it's not a buy, right? You need a candle to close above this area now for it to be a buying position. But at this point, man, this is just wilding out. Take a look on the 1 hour time frame. 1 hour candle closed like a weak bearish candle, and this 30-minute candle is rejecting the area now, and like a lot of things that are happening here. So yeah, I'm just gonna chill out, gonna wait. The only reason I'm waiting is because we want price to print something that we can recognize, as something that we've seen before to probably execute a trade on. All right. So all right, so 1 hour candle is still open at this point. Can't really do anything. I mean, if we break this low, we can continue down. But at the same time, oh, yeah, it's not enough range because you got a wick over here, 8 pips away. You got another rejection down over here at like 13 pips away. So I guess we'll have to wait for these candles to close to really tell us what we're going to do. Because I mean, even though if we're ranging over here, the next hour is the power hour, right? So power hour is the New York open hour, on a Thursday. So let's see here. So one thing is for sure, we're rejecting that resistance, right? This resistance is something that we're rejecting right now. Looking on the 1 hour time frame, 1 hour time frame is very easy to read at this point, and the reason why it's easy to read at this point is because if we kind of like zoom in, what we see is that if this 1 hour candle breaks the high over here, there's a very, very high probability we're going to continue on to fill this wick, and then we can continue on bullish, right? But if we don't break that top over there, then there's a very high probability we can continue down to fill this wick, continue down, continue down. And the reason why I say we can continue down without retracing like these candles retraced is because the time. Right? Someone talked about market timing. You look at the time. This is 1500 hours. This is New York open. This is 8 a.m. Eastern. This is when there's a lot of volume in the market, right? So we got to look at ways that we can capitalize on this volume. So the only way I can see is that we can capitalize is that if we break below this area right over here. If we break below 134.20, then I think there's a very high probability we can continue down towards this support, which is like 18 pips away, 17 pips away. If you want to extend it like 20 pips away, right down over if you really want to force it. So I think that's going to be a pretty good execution right there if you want to catch on with this momentum. And at the same time, I think we don't want to miss this break of the high over here as well. So we're going to clone this. And now the stage is set. The stage is set, my friends. We have set the stage to execute our trades. So if we break below this area, we can continue down. And if we break above the blue line, we can continue moving bullish. All right, so this is the next 15-minute candle starting now. And if we continue moving bearish and break that low, oh, we're coming close to break that low over there. Will we break that low, or will we just kind of like break it? Okay, see, so we're breaking that low right there. So let's take a look on the 30-minute time frame. 30-minute is breaking the previous candle's low, right? I would say this is going to be an advanced trading idea. Well, not really advanced because, it's like as we discussed about the power hour, the New York open hour, right? So we're expecting candles to continue moving. Oh, we're also breaking down the 1 hour low over there, but we're getting our confirmation here in the 15-minute. So I think having a stop above the 15-minute would make sense right there. So we're going to put it like 10 pips right there. Yeah, it seems good. Looks pretty good. Could you use dynamic entries in this case? Probably not. Oh, actually, you know what? I want to use a lower risk because we're executing it only on the 15-minute time frame. Wanted to use 1% risk, but we used 2%. So that was kind of like a mistake over there. Oh, wow. Okay. That's fine. So I guess that didn't work. So we're back down to 0.6%. All right, so we're breaking this low here again, right? So we're breaking this low here again. I guess this is where we can give our trade a second chance, right? So let's give our trade a second chance at this point. All right, let's take a look at this. Man, ruined the whole winning streak. We were doing so well. We were doing so very, very well, and all got ruined. Wow, good job, Raja. Good job. All right, so the candle is closed. We're about 9 pips at this point. Obviously, it played out, so probably going to close it right over here. Yeah, man, this would have been 4% here for the week, but shit happens. All right, let's go towards the next session over here because yeah, this kind of like maybe messed me over here a little bit. Wow, look at that range. Holy. Look at those wicks over there. Yeah, this was a tough trading day. This was very, very tough trading day over here. Let's go. Oh wow. So it's breaking out here further on. Okay, let's go over to the next session here now. Let's just ignore that this day even happened. So let's see here. We're gonna go towards London Open at this. So this is London Open, 4 a.m., 5 a.m., 6 a.m. 6 a.m. Eastern. So I'm going to remove all these things here, remove all these zones here at this point. The daily candle is coming down, which is really interesting because if this daily candle is coming down, now I'm not sure if most people have noticed this. What's this? How many pips in profits do you move your stop loss to break even? 10 pips. We discussed this in the start of the webinar. So if you're just joining into the webinar, you have to watch what day of the week. What do you mean, what day of the week? Oh, I think that was Wednesday, Thursday. So anyway, since this candle is coming down over here, now I've seen certain things that whenever a candle pattern like this is happening and we're going bearish, price has filled this whole wick down over here. Now, this is something I've seen in the past, and I kind of like remembered this when I saw this right now. And it doesn't mean it's going to happen all the time, but we can kind of like anticipate it, right? I mean, if this has happened once, maybe this was the last time it happened that I'm remembering. I don't know. So yeah, so we're gonna keep this idea in the back of our mind, because of this is the last day of the week over here, and if price does come down over here, I think it's gonna be pretty awesome to see that this really happening. So let's take a look on the 4 hour here. So we're gonna remove all our zones here on the 4 hour time frame. One by one, we're gonna remove everything here, remove everything right over here, remove this blue line. And seems like this 4 hour can continue down, but we're not sure at this point. But we can see is that we have a support down over here. Maybe there's some sort of a rejection over here based on the previous support we formed yesterday. So yeah, I don't know. Let's take a look on the 1 hour time frame here now. So looking at the 1 hour time frame, what we can see is that price basically formed a support, right? Because the candle's closing bullish, no matter where the candle's closing bullish is, we have a support formed. And before that support was formed, we formed a resistance right over here, right? And if we form a resistance here, now we got to do is we got to clone this onto the smaller time frames, the 30-minute time frames, and let's see what's going on. So looking at the 30-minute time frame, we're creating another support down here at the bottom. We have another resistance being created here at the top. So I guess at this point, we just have to wait at this point to see that if we break this low, where can price head off to? I think the first destination could be right down over here, or it could be like, maybe somewhere down over here at 130, 130, 250. We're not sure. So we're just going to wait at this point, and yeah, let's see what happens here. So we're going to go to the 1 hour, and we're going to let this play out here and slowly and see if we do start. Oh, okay, look at that. Kind of breaking that low. So if we break this low, then there's a high probability we're going to continue moving down. And that's something we're going to keep an eye out for. Because if we're coming down, we should be coming down towards this support right over here. And what I want to do is I want to clone this over to the daily and see what that is. So on the daily, it's this complete wick fill right over here. Okay. All right. Perfect. The stage is set now, right? So I'm going to use some multiple confluences over here to see if you can execute something. All right. So far, it's ranging. We're in this 24, 23 pip range. There's nothing to do in this range. But if you do break above this area, let's see here. If we break above this resistance, then we can continue up towards, 130, what is this? 131, which is like around, 18 pips away. But man, look at this range here. First, 12 pips away this wick, and then boom, free fall down to, 132.90. It's going to be a great move over there. Just incredible move if it does happen. All right, so we're just waiting here. So okay, we're approaching this resistance, right? If we start breaking above this resistance, we can start to see if we can take some buys. So notice how I'm keeping both buys and sells in my mind. And I'm always talking to myself. Even though when I'm trading live, when I'm on mute, I'm just having a conversation with myself on things I see happening, may happen. So looking on the 1 hour, even though, oh man, like look at this, okay? So this might be a little confusing, but with practice, you can really get it down. On the 30-minute, we have a support over here, right? On the 1 hour, we have a support right over here on the 1 hour, right? So if this current 1 hour candle breaks its own low, there's a very high probability it's going to continue moving bearish to fill this wick right down over here, or it may continue moving down after that point, right? If it breaks its own low. So in that essence, we're going to say that, okay, if it breaks its own low and on the 1 hour we have a probability to continue down, this 1 hour bias, it over trumps the bias on the 30-minute time frame, which is a smaller time frame than the 1 hour time frame. So we're going to do two things here, right? First, I'm going to enter an aggressive entry once if we break the low over here, and then I'm going to try to see if we can get a proper entry based on the 30-minute time frame, right? So yeah, so that's what we're going to do. It's something I'm working on here. So let's see if we break this low over here on the 1 hour to see. All right, perfect. So we're breaking the low at this point. So if I want to take an entry here, I want to see where my stop loss is going to be, right? So if we're breaking the low on the 1 hour time frame and this candle is about to close in 30 minutes, having a stop above the 1 hour candle is going to be around 18 pips, but having it above the 30-minute candle, it's going to be much better, which is going to be like around 10 pips, right? So again, I'm not taking this based on the 1 hour. Oh, on the 30 minute. We're taking it on the 1 hour candle. What's this question here? 1 hour breaking its own low is also 30-minute breaking previous candle low. Yes, but it's also approaching a 30-minute support, which is where it gets really, really tricky. So you have to be really, really careful what you do at this point. So what I'm going to do is I'm going to open a 0.75%, going to put stop loss above this 30-minute candle, which is going to be 10 pips, going to go into a selling position. And okay, so now 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 we're going to start breaking the 30-minute low here. But at this point, can't really enter a position here because we have to wait for this candle to close. Oh wow, look at that. It's retracing at this point. Retracing, opening. This is awesome, man. If this candle closes below this area, man, we're going straight down. If the candle closes at this area, we're going straight down. So I think that's going to be a pretty good move here. So look at this. This candle's coming back up. We don't want it to close back in the range. We want it to close below the range. See, now I'm not putting stops at break even. I'm not closing partial positions because I already have a partial position open. My normal risk is 2%. I have 0.75% running. Partial risk already running. So there's no need to close partial positions. Right? So we're just waiting at this point to see how this candles are going to close, because if this closes bearish, let's take a look on the 15-minute time frame. Wow, look at that. I think we did a really good rejection there on the 15-minute time frame. So yeah, this thing is about to close here. If this thing is closing in 3, 2, 1, there we go. 15-minute candle closed bearish. Looking at the 30-minute, 30-minute candle also closed bearish. So now sometimes, we're faced with a dilemma over here. One dilemma is that one part of us says that, hey, like, what, we have to wait for a retest. And then there's another part that says, you know what, GJ, it rarely does a retest. So I think a better option would be to maybe wait to see if we do break the lows over here for price to continue down. How many people have taken trades this past week where candles are bearish, heavy momentum, broke support, clean traffic, and you've executed once we broke the low or break the high? Say yes. Like if you've taken a trade like that this week. This candle pattern 15 minutes has repeated many times, zooming down. Yep, absolutely. Absolutely. So I think if we break the low over here, we can continue moving down. But the problem is going to be where our stop loss is going to be. So perfect. We broke the low over here, right? Let's take a look on the 15-minute time frame. I think a pretty good stop. Let's measure this now, right? A pretty good stop is going to be 17 pips away, right? 17 pips away. But since it's within that range, couldn't you enter another position at the break of the low? Oh yeah, we will right now, right? So we're going to put a stop. This is like 15 pips away. Probably going to put it at like around 12 pips, 11 pips in the middle of this range, right? The reason I'm putting it in the middle of the range is, so now what we're going to do is, so we already have 0.75 running. So instead of opening another one, I think what we're going to do is we're going to open a 1% right over here. Right? So now we're not expecting this 15-minute candle to wick all the way back up. We're not expecting it to wick all the way back within this range, because this previous candle, it already wicked back in this range. So the most we want to range or to do like a retest would be back up to the support, but not back in this range. Isn't adding more position risky looking at recent left rejection? See, now here's the thing. If you think, then probably your bias is not that strong. Probably you don't have that much confidence that price is going to go down, right? Either price is going to move down or it's not going to move down. If price moves against you, then you have risk parameters over here that will save you, right? If price moves in your favor, then you're like, okay, you know what? Perfect. Because if we look on the 4-hour time frame, what we see is a clean candle coming down. What we see on the 1-hour time frame, even though there's some sort of a rejection, but we're coming down, breaking the support to come down. On the 30-minute as well, right? We're anticipating price to break this low to continue down. Because remember, we talked about the daily candle coming down to fill this wick. That makes sense based on the 4-hour now, because 4-hour has to retest this low over here, right? So if you think this is going to be risky, then maybe, use a lower risk, or maybe don't take this trade. Maybe just sit out and watch this trade play out, because the more you watch these things play out, more confident you're going to be in taking these positions later on. So we've broken the low over here. Now we're expecting price to go down. Now, if price rejects this area and if we close bullish, we can just close positions, right? We can just say, okay, you know what? We tried. Let's just close positions and call it a week, right? So yeah. So you have to trust price action. And most of all, you have to trust that you can manage your risk in these situations. So now we've broken below that area. We're coming down into this clean traffic area now, but we're not securing positions at this point because we're still running at around 2 pips, 3 pips here because we want it to come down towards, around 10, 11 pip where I want it to go. And then we're going to let the runner run. So this candle is also about to close at this point, and I really wanted to close bearish so the next ones can continue bearish down. You already have got your 1-to-1. Is it better to close partial on it? No, I'm still gonna have it open because it's already a partial at that point. Actually, you know what? You're right. We're gonna close partials on it right here on this position here. Gonna close partials on this position over here. This. Oh, we close partials over here. Okay. Gonna close partials over here. You are correct. Gonna put stops at break even, and yeah, that's it. That is it. Beautiful. Now, if it wants to go down, it's going to continue down. If it wants to retrace, it can come up to retrace. But first thing I want to do is I want to maybe bring this stop loss down over here. Oh, bring the stop loss down over here in profits. And yeah, that's it. And as we're breaking the low over here, maybe a better idea would be to maybe bring stops above this 30-minute candle now. Right over here, bring it above the 30-minute candle. Perfect. So looking on the daily time frame, oh nice, we're coming down to the grayed out area. We're coming down to the 4-hour area here as well. Oh wow, did we fill this wick over here in the daily time frame? Almost there. We're running in pretty good positions right now. We're breaking below these zones. We're coming into this, fat rejection area. Wow, look at that. See this? It got filled. This is what we were talking about there earlier on, right? This is what we were talking about earlier on. So I think at this point, we can just close out maybe partials over here, maybe close 75%, close majority of it, close this whole thing over here, and yeah, maybe trail the stop loss here too above the 15-minute time frame now. Perfect. This is when GJ really, really runs, right? So we secured positions at 10 pips, right? But the runners gave us most of the profits. We came down to that area, probably going to secure everything at this point, and yeah, that's about it. Let's see what the next candle does. Retracement, right? We came up to this area, secured positions, and boom, consolidation. And the reason why there's consolidation now is because look at the time, right? We moved into New York opened, and then we already had this volume down, so New York Open decided to range, and then we had some sort of volatility in NYC Open. There was some volume, and then we had some volume during London close, and then that's it. But also the most important thing to note is we never risked more than 3%. Right? We never risked more than 3%. Most we risked was 2%. That's it, 2%. In the trade previous to this trade, look at this. All right, let's take a look at this here. In the trade previous to this trade, we had a loss over here, $100 loss. $100 loss. We had that loss. We took that loss. We're like, yeah, whatever. Let's go towards the next day. We came towards the next day. We did an analysis. We entered positions, managed our risk, and man, it just ran amazing. It was amazing. But we never risked more than 2%, right? So 7.58% gain. So I think it was pretty good. This is going to be in the database in the next 3 hours, 4 hours. It's the 4K recording, so it's going to take some time to buffer it in code. It's going to be in the simulation section. So, but I guess with this also we waited, right? We had to wait. So the thing is, if you're going to rewatch this recap, the most important thing to focus on is that we waited for candles to print something that we have seen before. We didn't enter, we think buys, we think sells. No, we waited for candles to print something what we've seen before. Some days they printed them early, some days they printed them later on, but they did print that. We only took one trade That's it. There was one occasion where we gave our trade a second chance, but other than that, it was just one trade. So have a great weekend, everybody. We're going to see you Monday morning. Take care.